All right, let's talk about what's going on in the markets today, because something pretty rare is happening right now. Bitcoin is holding strong at 113,022. Gold is popping plus 187% to 33%. Meanwhile, the NASDAQ is slipping, 287%. Now, this exact pattern, Bitcoin steady, gold up, stocks down, hasn't shown up since March 2022. That was right before the Fed made an aggressive policy pivot. Back then, investors who caught this signal early and went defensive outperformed the market by 15 to 20% over the next 6 months. So today, I'm going to break down what this signal means for your portfolio and share the strategic playbook that worked back in 2022, which might just be lining up again right now. First, the macro backdrop. Historically, year 2 of a U.S. presidential cycle is rough for equities. On average, stocks are down around 8%. But here's the thing. In uncertain times, crypto and commodities often shine. Right now, markets are expecting the Fed to pivot in March 2025. And here's a fun fact. About 150 days before the first rate cut, markets usually start pricing it in. That's exactly the kind of setup we could be looking at. Now, Bitcoin's technical picture is super interesting. That 113,522 level? It's right at the 50% Fibonacci retracement. When Bitcoin holds that during market stress, it's often a sign big institutions are quietly loading up. We saw this exact pattern in April 2019, October 2020, and July 2021. And every time, Bitcoin rallied 35 to 65% in the months that followed. Gold is telling its own story. At 3,347, it's echoing the 1979 setup, when gold skyrocketed 125% in just a year. It's rising even with a strong dollar, which screams, investors are hedging against inflation. Central banks bought 650 tons of gold in Q3 2024 alone. That's created a solid floor around $3,200. And historically, from January to March, gold averages a plus 8.3% gain since 1970. So a move toward 3,500, 3,600 is very much on the table. Meanwhile, equities are looking shaky. NASDAQ is down 0.87% today, but under the hood, small cap tech is down over 2.3%. This is exactly what we saw in December 2021, right before a 35% sell-off in growth stocks. And here's the kicker. The VIX just went into backwardation for the first time since March 2023. That's Wall Street's way of saying, we're not feeling great about the near-term outlook. So what's the play here? In 2022, the winning strategy was simple. Dial back risk in equities, add exposure to hard assets like gold and Bitcoin, and keep some dry powder for opportunistic buys. The market's giving us the same warning sign again. And history says, ignoring it could be expensive. So, whether you're trading actively or just managing your portfolio, this is one of those moments where paying attention really matters. Stay sharp out there, and I'll see you in the next one.